sunny Chicago out basking in the pool with your phone.
Well, thanks for having me, man. When the internet went down today, I'm like, how am I going to do this? And then thank God we have one of our 80-degree days, one out of like four that we have per year. We got it today.
Yeah, yeah. Well, it's nice to have weather that's nice outside so you can be on your phone so you can pay your cable bill.
Yeah, there you go. Yeah,
Yeah.
yeah, yeah, exactly.
So, no, that looks very inviting. I might have to catch a plane and get out there and see what
You're always welcome, bud.
Well, it's good to see. We were talking offline and I wanted to check in with you because, CPI numbers came out and, they're good.
Yeah.
And even if they were bad, what we're seeing is it's like the bond market's not reacting to anything. The rates aren't going up or down. They're just staying steady. And, Pat and I talk a lot and he goes, they're stuck in this channel. But I mean, you could literally say that the Treasury Department burnt to the ground today and the bond traders would go, oh, whatever.
Oh, I get it. I get it. Well, the weird thing is about 2 weeks ago is when we peaked. When I say we peaked out, the bond or prices they were really up there, and then all of a sudden we just started having bad news after bad news, and the mainstream media. I mean, they pump this thing like it's crazy, but you start seeing a lot of the economic data, and that's why I think you had me. Is when you start seeing it, we can lay it out. It's not so bad. So if you just wipe out the tariff unknowns, you can see maybe there is light at the end of the tunnel. And then when you do see, something like a China come through, and there's just okay, we're on the right direction. Well, you see the stock market go up 1,000 points. You see everything else moving. So just what's going to happen when we do actually start getting tariff settlement after settlement after settlement. I think it's going to be great. But yeah, the bond market's just, you sit here and you scratch your head. It's like, what's going on?
Well, it's nobody likes uncertainty. The bond market, the stock market, buyers, sellers, everybody's sitting on their hands. But of course, our market here in Phoenix is driven by lack of affordability, but there's still some movement out there. But what I'm seeing is, when I see comments and articles stuff about how our inventory is exploding. Well, and I hope I'm doing a good job of explaining this, but the inventory is not growing because more people are listing their homes. Actually, the number of people putting their homes on the market this year is lower than last year. Well, how come we got more houses for sale this year than last year? Because sales are lower than last year by 300 a week. So sales are 300 a week lower than what's being added on. So every week, the available number of listings grows by 300, not because people are in a panic and selling their homes. It's just like they're not being gobbled up. And this week it'll be even worse because it's the numbers rolling in now include Mother's Day. And, did you buy your mom a house for Mother's Day? It's so I don't expect that number to change. In fact, it went below 3,000. So then we're going to have Memorial Day. It's going to be even worse. Rich here in Phoenix saying rates are up at the 10-year because market sees a flood of additional debt. I think rates are just doing this up, down, up, down.
I mean, what he was saying is there is, and this is what I'm trying to drill down. So I appreciate him posting, and I didn't mean to jump in there. But yeah, it does seem like there's a lot of debt, and here's where I'm scratching my head, and I'm going to be doing work over the next couple of days on this. I saw some articles come out the other day, and it was like we're $1 trillion more in deficit than we were, last year during that particular month. And I was like, well, it's just, Rick, you and I were talking right before here. It's like when you start cutting things, it's like, when you start hitting, your pay starts going down. You're like, oh man, I got to start cutting my bills. You start cutting, your cable bill, $30, and your phone bill, you reduce that line that you didn't need, and things like that. So I think the cuts are coming, and you can even go to that National Debt Watch thing or whatever. You can see that. I don't put a ton of credence in that stuff, but I really like to drive down because with all the eliminations of jobs and all the waste and things that they're finding, I don't see how the deficit's going to continue to rally like it was, I guess is the best way that I would put it. So is the deficit still going crazy? Yeah. But, is it starting to calm down? I sure hope so. And I still can't figure out why a lot of people in DC, they oversee the House's books. I mean, if you're getting audited, I'd be like, okay, well, audit the thing. If there's some things wrong there, let's know what those things are. But a lot of people are going to disagree with me on that. But I just wanted to chime in on the debt. I don't think the debt loads they're going to start deteriorating quite a bit. And then the Fed has some control with this because they're also in quantitative tightening mode, meaning they're still selling into this market. So the Federal Reserve is also still selling bonds and mortgage-backed securities into this market that's still already oversaturated and still has these so much unknowns. That's what you're seeing. Basically the bond vigilantes are saying, we're not going to do anything. We think that yields should stay high where they are and maybe even move higher. And then you have, as the economic data comes in, like we saw the CPI today, a lot of the data looks good. So
Yeah,
I don't take over the whole show, but even the data that we got last week, when you start seeing, the PCE, the inflation number that the Federal Reserve really monitors, you got that coming in. You have the unemployment rate coming in. All those numbers, we had an employment number that came in at 177,000 last cycle. They were saying the employment market's just going to plummet. Well, we still have, I think, 150 to 170,000 on average new jobs created each month over the last 6-8 months. So it's still a healthy job market.
Well, I also, and you and I talked a little bit too, I get these comments about delinquencies and how they're increasing and everything. And then I see an article here, and a lot of people won't be able to see this because watch on the phone. I'll just read it real quick. Because it's the delinquency rate for mortgage loans on 1 to 4 unit residential properties. This isn't single family houses, increased to a seasonally adjusted rate of 4.04% outstanding after the first quarter. And it just said it's up, still below last year's or below historic averages. So it's up, but it's still low. And it's, when I look at it on a chart here,
it's crazy
where the delinquencies are, that they're down here. So where's the alarm? And now, could it go up? Of course.
Yeah.
Who knows? And I'm not trying to tell everybody that the economy is blooming and everything's great. Hurry up and get out and buy a house. But I'm saying some of the headlines I'm seeing, I always dig in after I read a headline.
I do the same thing. It's funny because you guys, I talk to people all over the place, and I kid you not. Today, I got two contracts from the state of Washington, one from Ohio, one from Florida today so far. The activity and purchases it's going pretty good. And all over the country. Because I talk to people everywhere. The Northeast is doing well. I live in Chicago. Housing prices are here. I got 2 of my neighbors putting their houses up for sale, a lot more than I thought they would, and they're selling. There's only like three houses in this neighborhood for sale, so houses are still continuing to rally here. I talked to the people in Washington. There's a group of people out there I talk to. Their market is phenomenal. Oregon, it's doing very well. So you got, between you and then I talk to people in Florida, and now even you come out and say this, I say it as well, is I don't know what's going to happen. I don't know if there's going to be a crash. It doesn't seem like it's going to be. But if you look at Florida, it was Arizona and Florida and kind of Austin where I was like, I don't know what's going to happen. I don't live there. I don't have my boots on the ground there. I rely on you guys to understand the markets, because I'm not going to watch these guys doing these videos, getting 150,000 hits a day, just saying the market's terrible, the market's terrible, the market's terrible. And they've been saying it for 3 years. So whatever.
If you use the word crash in any form,
yeah,
in a thumbnail, your views will double. And I proved that Sunday night. I just said, is Phoenix crashing? And it's it's doing well. But our market is, if you don't price right, you're going to sit there. It just, people are relying on comps. So there's comments like, well, I'm priced correctly according to the comps. Well, that doesn't mean you're priced correctly according to the market. A comp tells you what sold 3 months ago.
Here's a unit. There's a triplex out in Washington that there's an investor watching these things, and he's kind of timing this right. They just cut, and I just said Washington was doing well. But this is on your point. He was trying to buy a triplex, and it was 1.9 million, and they just cut it to 1.7, and he's waiting for 1.6, because that's what it should be. If you do all the rent rolls and the analysis of everything, that's what it should be. So they got no hits at 190. They're going to get a ton of hits at 170 or 1.7. It's going to sell at 1.6, because then it cash flows. So again, right on your point, if you if you try to overprice in your market, it's not going to, the markets aren't that hot, but so that's my take on that. So
Cash, Rich is saying cash buyers still have a great advantage. They
it,
they do, and in that they're not asking for seller concessions. But I'm telling you, what I'm seeing, Rich, is cash buyers are kind of overstating their advantage, and they're coming in exponentially lower than what a finance buyer would. I mean, a
I,
finance buyer will come in and say, "I need some help with closing costs," and most cash buyers are coming in, and I mean, their prices are lower than what you'd get from an investor, and
yeah,
because they think that the cash is so king that the seller's going to jump all over it, and I'm finding that they're not.
I talked to
Um,
D.R. Horton yesterday. I had a person put a contract in with them, the realtor. They were signing everything. They validated everything with me. We went through the numbers. When can we close? This morning, I'm like, hey, when am I going to get the contract? They're like, somebody came in last night and offered cash. I'm like, okay. So it's happening. And it's
well,
not.
speaking, I'm glad you're bringing up Rich saying, don't you need to come in lower to find the real sales price? The whole thing's a negotiation. I mean, it's just you got um, our market. I'll describe it as this: at a buyer's market, yes, more so in the outlying areas than central areas, Chandler and Gilbert, Phoenix. But there's no seller desperation. The amount of cancels and expires of people saying, I'm going to try and sell, there's no desperation. People are selling because they're moving or they just want to upgrade or whatever. But it's not, oh my God, everybody's selling. I gotta get rid of this thing before I end up upside down. And that's when you're going to get a lot of attention with a low ball cash offer. It's like, okay, good. At least something came in. And we had a good example of a gal in Scottsdale had her house for sale like 1.3 million, and she lowered it below 900 or below $1 million and 900 range. And she made a comment the other week and just said, I took it off. I mean, I don't have to move. So
Right.
she wasn't selling out of desperation. So you could have swooped in with a low ball cash offer. You still would have said no.
Yeah.
But
That's like
new
here.
construction, if I can raise a couple of questions on that for you, because especially on the financing end, and I've got a link down below, and you can look at new construction. This is what it shows. You can pick your area and stuff and see what's available out here. But I'm reading on the incentives tab. Okay. So it says here in 40% off your loan on selected homes for a limited time. 4.25% with a 110 buy down. Now I haven't heard of a 110 buy down on the first year, starting at 3.25% plus 6,000 towards closing costs for May closings. 4.875 buy down in the first year, starting at 3.875 plus 6,000 towards closing costs. Earnest deposit for a quick move in is 1,000 to 5,000. $10,000 earnest money for cash, $20,000 for investors. Now, here's one of my questions. If I'm seeing a builder right now that's offering a 4.9% rate, what do you think that's costing them today?
I mean, I can back engineer it if I had the numbers. A lot. So I mean, but here's what people have
In
to
the
understand.
20, 30,000 range?
Oh yeah, yeah.
So getting
And
them down to 3.9 is exponentially even worse.
oh yeah, it would cost. I mean, based on the loan amount, it could cost 7, 8, 9 points. So you're talking 30, 40, $50,000. Well, here's what the builders don't want to do. They're not going to. I mean, it would be easier for. I mean, think about it. Home affordability. Cut the prices of the homes 30, 40, $50,000. But they're not going to do that because, and we can't even compete. Here's what's tough with the builders lenders. You can't compete with them. Is the tough thing. So I mean, they've worked out this phenomenal deal, especially for buyers. But again, think of it. Do I want a lower payment for a duration of time, which, yeah, 3-4% rate is really enticing, or would I rather want 30, 40, $50,000 off of the price? Well, they sure as heck don't want you to take 30, 40, $50,000 off because that brings down the whole neighborhood. So they're going to do everything they can. Their profit margins, just think about it, their energy costs just went down 50%. Their labor costs, that's a pendulum there. Lumber cost over the last 3 years went down, I think, like 50-60%. So their cost of labor, and somebody could correct me if they want, but their cost of labor came quite a bit down. I work with two bigger builders, and they're like, on a $250,000 loan home, I mean, these guys are making 75 grand, 100 grand. So you think, as they move up the pendulum, their profit margins open up a little bit more because of a lot of, like I was saying. So now they're saying, okay, we can give them price incentives, but we don't want to give it on the price. So we got to give it some other way. And then what they do is they own, and you can verify all this you guys want, most of them own a piece or the whole company when it comes to the mortgage piece of the puzzle. So what they do is they entice you, we'll give you $20,000, $30,000 and all these perks. But then as the lender, they're going to charge you a bunch of extra monies that you wouldn't otherwise charge. A lot of times I'll see they're giving you a rate. It might be a quarter lower than what I could get you. And they're saying it's $8,000 to buy down that rate. With me, it would be like $500. So, but it's still like, use them because they're giving you more than the $8,000. They're giving you $20,000, $30,000. Nobody can compete. So if you're out there and you're working with a builder that's giving you that, just sign what they have. And then after you close, especially if you have a conventional loan, reach out to even me, because then I can review the paperwork and say, okay, because you have no obligation right after you close, you can do whatever you want. So what I advise a lot of my clients to do is take that price initiative, take all the money out, try to drive down the price of your home, then use all the extra to pay off any cost that you have, and then use any extra for whatever else you have, but take the highest rate. Unless they're giving you something crazy like this. But if they're just giving you a rate for like a year, they're buying it down 1% or something like that, don't take it. Take the money, because, let's say in 6 months or a year, rates go down 0.5%. You can refinance now. The only thing it would cost you is title fees. So it's usually pretty easy. Now, the devil's advocate is, Dan, house prices are going to crash, so you can't refinance because house prices are going to crash and you'll be underwater. Rick, you take that one.
Well, who knows? I mean, I think what people need to realize too is that, they're throwing everything at you right now, but there's a limit on how much they're going to throw at you. That's why I asked how much it would take to buy down a rate. And you said that they make $75,000 to $100,000 per house. So they're not going to give all that to you. They're not going to give you 60 grand. So there's certain things they can do. They can give you, some really good upgrades because they own the design center. So they've got wholesale costs there. So they can tell you that they're giving you 15,000 and maybe it only costs them 3 grand. I get it. They're buying down the rate. The lender's helping with that as well through back end fees. So you're looking at that and going, okay, that math works. But when it comes to trying to get more contributions towards closing costs, you can get some. They're willing to do that. They're throwing in nicer appliances, but they're not handing a lot of money out. In other words, if you're asking for ancillary things like, I want 15,000 for landscaping, you're probably not going to get it. And you're not going to get much of a reduction on the base price because they don't want to reduce the base price for the entire development. And, is it going to be harder next year? It could be. I mean, if these developments don't sell out and then now you're trying to get that house appraised, without all the goodies, that could be a problem. Because the attractiveness of the house price isn't just the house price. The attractiveness is all the other things that they're providing for you. And Dominique here says, new builds are creating a negative impact to existing homes in the market. When can we expect this to change? I can't compete as I have a home for sale. It's only 8 months old. Well, selling a home that's only 8 months old, if you've been in there, it's going to be hard to compete no matter what the market is. I mean, I don't know how you get out underneath that, but I've told people, look, if you got a pool, you're already competing. If you got landscaping, you're competing. You got window coverage, you're competing. Just make sure your house looks great. And you may not be able to offer that kind of financing that they do, but nobody's going to have to come in behind this and put in their swimming pool, pay for the landscaping, pay for the window coverings, and, away you go. But if the house is less than a year old and you've only lived in there less than a year and you're trying to sell it, that's a struggle no matter what the market is.
Yeah. And we even say, I say it on my channel, and Rick says it all the time, if you're in and out of a house within 1, 2, 3 years, you're probably going to lose money, even if your house doesn't go down in value. You're going to have acquisition costs when you're buying it, and then those costs when you're selling, and they're just some costs you can't avoid. And in some areas, it's pretty expensive too.
Well, I lived in a condo up in Everett, Washington. It was my very first purchase, and the economy started turning. It was when Jimmy Carter was president, and rates were going through the roof, and they had a closeout sale. And I knew nothing about real estate, except that I just thought the closeout sale was the most unfair thing to my equity on the planet. And I was so mad at them. And I thought, you idiot, are you? I mean, I look back on that and go, gosh, I was dumb. I mean, I didn't understand there was no internet. So
Yeah.
you didn't understand what was really going on in the market. You're reading the newspaper and watching the nightly news and saying, well, who's this guy with a cigar that's raising interest rates? Why can't he just lower them? And, but I was just so mad that they were having a closeout sale because I'd paid $34,000 for my condo and now they were selling them for 29. They only had like 3 left, but
That's a big bite though, percentage wise.
oh, it was. It took me 10 years. I rented it out when I bought my first home, and it took me 10 years to sell that thing. And I got out of it exactly what I put into it and not a penny more. Now,
Well,
I got rental income that helped pay for it. My rental income never did exceed what my mortgage payment was, and all kinds of headaches with that. Had a new baby, and it was a tough time. But how long can you live in 598 square feet and be okay? So,
with
but then I bought my house for 103,000. I think my whole family thought I was crazy. I looked it up. It's in Briar, Washington. I looked it up this week, and it has a value of 950,000.
I
It's like
remember
I could have stayed put.
we moved, my wife and I, we just got married, moved to Chicago. We made good money on our wedding when we got married. And we were young. We were like, I was 22, 23. We're like, why pay rent? We're just going to use the money that we had from the wedding to buy a house. We bought a house back then thinking, oh, this is crazy. So I remember talking to my parents, my in-laws, and I think we paid like 180 grand, I want to say at the time. And they're like, oh my God, did you buy the city? And I'm like, no, I just bought a house, you know? So it's funny how, different times change and the values and everything change. But yeah, that was up here, that house probably 600,000-700,000 now. Yeah. Like you said, it's crazy, but it's
Well,
at one point, like we try, I never tell people you have to buy a house. You should buy a house, whatever. It's like, if your financials deem it, but at what point, do you dip your toe in? Because it's like, even the stock market, you talk to somebody about Bitcoin or Nvidia or something like that, they're like, there's no way I'm going to invest, it's way too high. And then you look back, 3 years down the road or whatever, most of the time when they say that, it's like, oh my God, it tripled again. So it's like, at what point, so if you never try or risk anything, you're not going to go anywhere. I'm not saying, risk
yeah.
it, but you get what I'm saying.
Oh,
So
I'm risking $200 now. I bought a options contract for Open Door, January 26th option contract, because I thought, what if somebody buys them?
yeah,
You know, what
yeah,
what'll happen to the stock? Now I'm down. Let me check here. I'm down um, $45 now, which is, I've got till January to do something. But that, what if I'm just going to throw $200 out there in an options contract? Maybe somebody buys it. And now it's worth 1,000, 1,200. So be it. Desert guy here says tries to sell house. I'm not sure if that's a question. Clear that one up for me. I think we should all go join Richard here. He says he's sitting by the Camp Verde River watching the show. So have you been to Camp Verde? Oh, Dan, did your signal just freeze? He's on a cell phone out in his backyard because he didn't pay his internet bill. So I think we lost him there for just a moment. Dan, I'm going to pull you off here for a second and show some couple of charts here for the Phoenix market, and you can figure out if you're able to come back on or not. I'm kind of thinking maybe you won't be able to. Sometimes when you're doing it on a cell phone outside, after a while, it just goes, I'm done. So he's dropped off. He's going to try and come back on again. I want to show you this for our Phoenix market. This is our monthly average sales price per square foot. You can see that we started going up in 2024 came back down and slightly up now as we're starting in the first month of May. So there's a lot of up and downs, a lot of volatility in our sales price. And then I've been asked some questions about condos, so I'm going to show that to you. I know Florida is under severe strain with condos. We're not under that severe strain, but we did have quite the run up here in December of 24, and then it came flying back down, and now it's starting to creep back up a little bit, but it is tough. Desert Guy here comes back and says, tries to sell the house and doesn't, then tries to rent out, then goes back to trying to sell is not a winning strategy. Smart sellers need to drop more than 5K. I think selling, you've got, my advice is I look at the comps. Okay. Here's my house. It's exactly like these 3 other homes, and they sold for 500,000. Well, that doesn't mean you're going to sell for 500,000 today if the market is softening. You have to offer value. I think I got Dan here saying, let's see, phone overheated, go figure. Yeah, in Chicago, you bet. No biggie. That can happen when it's sitting in the sun. So you got to offer value. And I was describing the other day the popcorn theory. In other words, you got 3 bags of popcorn. One's $3. It's small. The medium one's $3.50. It's slightly bigger. The large bag is $4. It's $1 more than the small one, but it's sure a lot more of a bargain than the medium one. So the medium one is of no value to anybody, because it's like, for 50 cents more, I get this much popcorn, but for $1 more, I get a lot more popcorn. Why would I even consider the medium one? That's the way it is in your neighborhood. So you're looking at everybody else's 500, yours is the same. Add some value. Maybe the value is the condition of the home, whether or not it's got a pool, or the price. And if the price is a tremendous value, you'll get attention. And if you're too low, there are still people bidding you up right now. And look, Dan came back in. His phone is back on. Overheated in Chicago. That's going to be in the paper tomorrow.
I swear to God, I was sitting there, and then all of a sudden this temperature thing pops up, and I'm like, you got to be kidding me. So yeah, my phone overheated. So my apologies.
No, you got back on. Did you take your phone and you're back in?
I ran downstairs, set it on like a granite countertop, because I'm running off this thing right now. My internet's, I'm at my house working today, and the internet's down in the whole city basically. So sorry about that.
The whole city. Wow.
Well, it's like east of the river, so it's quite a big area. But
jeez,
sorry
that.
about
Take the phone and put it in a bucket of ice. So
if I go somewhere again, I'm gone. It just petered out on me.
Yeah, no biggie. I want to let people know. I was just talking about the popcorn theory. That you need to price, and you need to have a value, and so your home has to be valuable in this market. Now, I read that Rochester, New York's doing really well. There's a bidding war going on, but not because the economy's improving, because there just isn't a lot of inventory. And Kodak's way down. Who else was up there? Kodak, Xerox, and they're turning into a little bit of a tech hub, but and the weather up there is brutal. But there are parts of Rochester that are just incredibly beautiful. I lived there. I loved it. Penfield, Fairport. Look up Fairport, New York. It's fun. I have a newsletter, Dan. I want to let everybody know it's in the link below, and it comes out every Monday morning at 7:00. This is kind of a small view, but I always present the Cromford Market Index, but you can look at it on your phone. You can spend more time looking at it. And then I've got the commentary from the Cromford Report, Mortgage News Daily with their comments. Pat has now added a McMortgage tidbit, and then my opinion. So it comes out every Monday morning. Be sure and sign up. We had 13 people sign up yesterday. I was pretty excited about that. So
wait, I'm gonna have to sign up for it.
Yeah, you need to sign up for that. So it just focus on Arizona. But I also, and am I gone?
We need Rick back, because this is Rick's channel, folks.
I'm still here.
Not sure where he went.
I'm just gonna say still here.
Hold on for him for a second, or did he conclude? Let's see if Rick comes back.
So
there he be. You were out for about 30 seconds.
I do that anyway, even without the internet. I'll just blank out.
Yeah, you were gone for about 30 seconds there.
Yeah. I'll be sitting there talking to you across the kitchen table, and I'll just,
again. So. You just lost it again. So,
oops. Well,
sorry to interrupt.
we're going to do. We're going to go ahead and drop off here since we're having technical issues. But Dan, I will check back with you again in probably a few weeks. And until then, enjoy the weather you have and pay your internet bill, would you?
Will do. Take care, bud.
Good to see you.
I hope all your final tests go great for you. Let me know next week.
I will. Thanks. Take care.